Hey guys, welcome back to the Bitcoin Fortress podcast. This is episode 194. We are recording here on Sunday, December 14th, 2025 at block height 927,886, Moscow time 1123, and the fees are a calm 1, 1, and 1. This week, we are going to hit a familiar tension point in Bitcoin land, saving versus investing, and how Bitcoin keeps forcing people to confront whether they're actually preserving value or just chasing returns in a broken fiat system. That theme will tie directly into today's featured Substack post later in the show. But before that, let's jump into the news. There's lots to cover. First up, we will talk macro and market mood with a variety of coverage. Reuters reported that Bitcoin dipped below $90,000 as broader markets pulled back on renewed AI-related concerns and general risk-off sentiment. This is important context. This wasn't a Bitcoin-specific failure. This was liquidity tightening across all risk assets. Bitcoin is still treated as a highly liquid global asset, which means it's often the first thing sold when funds de-risk. That's not a flaw. It's a consequence of Bitcoin trading 24/7 with deep global liquidity. For long-term Bitcoin savers, this is a reminder that volatility is part of monetization, not a verdict on the asset itself. Next up, according to the block, Bitcoin and Ethereum chopped violently after the Fed delivered a quarter-point rate cut while maintaining a very hawkish tone, the so-called hawkish cut. Markets hate ambiguity more than bad news. And a hawkish cut tells you one thing clearly: the Fed still isn't done interfering. Historically, these half measures almost always lead to further easing down the road. Bitcoin doesn't trade the press conference, it trades the trajectory. Reuters also ran a piece suggesting Bitcoin's volatile 2025 might, quote, end on a low. This is classic narrative framing. Every Bitcoin cycle feels chaotic while you're inside it. The real story of 2025 isn't just price, it's ETF normalization, treasury adoption, better custody tools, and deeper integration into global finance. Price is just the noisiest signal, and it's certainly the one that everybody pays the most attention to. Stay humble, stack sats. CoinDesk reported that long-term holder sell pressure has eased significantly with long-term holder activity at cyclical lows. This is quietly bullish. It means weak hands have already exited and remaining holders are increasingly conviction-driven. When selling pressure dries up, it doesn't take much new demand to move price. This directly reinforces the idea of Bitcoin as savings, not a trade. CoinDesk also highlighted multiple on-chain metrics suggesting strong structural support near the $80,000 level. Support zones are uncomfortable places to buy emotionally, not analytically. This is where discipline matters more than predictions. Bitcoin rewards process, not precision. And of course, dollar cost averaging gets you more cheap sats when the price is down. Glassnode's latest week on-chain report focused on persistent ETF outflows and their impact on near-term price action. ETFs have added capital, but also fragility. They matter for short-term price, but they do not define Bitcoin's long-term trajectory. Bitcoin existed before ETFs, and it will outgrow them too. CF Benchmarks released its weekly index highlights, offering a clean snapshot of Bitcoin's relative performance versus other digital assets. This continues to show Bitcoin slowly separating from broad, quote, crypto beta, reinforcing the idea that Bitcoin is becoming its own category rather than part of a risk-on basket. And I'm talking about you, Pepe Coin. From Equity, market commentary highlighted spot Bitcoin ETF net outflows earlier in the week. Not all outflows are bearish, some are rotations, some are rebalancing, and some are simply institutions managing exposure. ETF flows are a tool, not a truth. Reuters published its global fund flows snapshot ahead of the Fed decision, showing defensive positioning across markets. Bitcoin remains downstream from global liquidity, but crucially, it remains globally neutral. Capital moves across borders far faster in Bitcoin than in traditional finance, and of course, 24/7. Reuters reported that Strategy, formerly MicroStrategy, remains in the NASDAQ 100 index. Index inclusion means forced buyers and sellers, depending on what the index is doing. That reflexivity can amplify upside, but it also introduces risk. Bitcoin itself is anti-fragile. Bitcoin proxies are not. Business Insider covered backlash over MSCI considering exclusions related to Bitcoin-heavy companies. Gatekeepers deciding what counts is a legacy finance habit. Bitcoin doesn't need inclusion to survive. Ironically, resistance often signals relevance. All right, jumping into the next section here. Corporate treasury and price targets. Barron's reported that Strategy added nearly $1 billion worth of Bitcoin to its balance sheet. This is conviction, but it's also leverage. While bullish structurally, it increases systemic exposure. A reminder for all of you listening, owning Bitcoin directly removes counterparty risk entirely, and that's why Bitcoin was made the way it was. CoinDesk followed up on Strategy's indexing inclusion and its implications. This creates feedback loops between Bitcoin price, equity markets, and passive fund flows. Powerful in bull markets, but dangerous during deleveraging. The markets take the elevator down and the escalator up. MarketWatch reported that Standard Chartered cut its Bitcoin price target roughly in half. Price targets are marketing tools, not fundamentals. But even after a cut, we're still talking six figures. So ignore forecasts, focus on accumulation. And of course, there's only 2 weeks left in the year. So come on, really? Face ripping rally, whatever. Bitcoin's going to do what Bitcoin's going to do, and it's probably going to disappoint a lot of people because that's what it's good at. Business Insider added color on how quickly banks shift narratives as market conditions change. Another reminder, Bitcoiners don't need permission slips or price targets. Moving on to regulation and policy. The Block reported that U.S. senators are making real progress on a comprehensive crypto market structure bill. Of course, they're all going home for the holidays soon, so probably won't see anything until the new year. But market structure debates are really about who gets paid. Bitcoin itself doesn't need regulation, but on-ramps do. The Block also covered comments from Senators Gillibrand and Lummis suggesting momentum is building. Expect compromises that favor incumbents, i.e., the banksters. Bitcoiners should expect regulated ramps, not regulated Bitcoin. A teachers' union urged the Senate to withdraw the bill, citing consumer protection concerns. This is optics warfare. Bitcoin doesn't need permission slips, and certainly then they fight you means You must be pressing a nerve. The Wall Street Journal reported that the Trump administration approved the first wave of crypto-focused national banks. More rails means more access, but also more surveillance. Self-custody education becomes even more important. Don't fall into the trap of it's safer and it's convenient. Safety and convenience is the trap. Friction, privacy. The panopticon does not like that. Moving on to Lightning and building. CoinDesk reported that Blockstream connected Lightning and Liquid for faster, more private payments. This is real progress, not hype. Quiet infrastructure improvements matter more than price chatter. CoinDesk reported on upgrades that reduce exchange dependence and move Bitcoin closer to a circular economy. This is saver infrastructure, not trader infrastructure. This is trustless swaps, of course. The block's data dashboard shows continued Lightning Network capacity stability. Capacity alone isn't adoption, but it's a useful heartbeat metric for the network. CoinWars data shows another expected difficulty adjustment. Difficulty is Bitcoin's immune system, and it doesn't care about minor narratives. So the inefficient ones will just go away. Tough business to be in, that mining business. Bitcoin.com reported that mining revenue remains tight, yet hash rate stays strong. This is Darwinism, not a crisis. Yahoo Finance covered rising U.S. energy demand driven by AI and Bitcoin mining. These industries are converging as flexible energy buyers, challenging outdated narratives. Moving on to adoption and culture. Let's see what's going on in this area. The Verge interviewed Block's product leadership on Bitcoin and Lightning payments. Bitcoin is framed as optional today, but optionality becomes necessity during times of stress. CoinDesk examined how football marketing is onboarding new users to crypto. Attention is easy, education is hard, and Bitcoiners have to bridge that gap. Tom's Hardware marked the anniversary of Satoshi's last public message. No founder, no CEO, no foundation. That is a feature, not a bug. And that's what makes Bitcoin different. All right, moving on to international and geopolitics. The Wall Street Journal reported on crypto executives courting Gulf sovereign capital. Long-term capital thinks in decades, and Bitcoin fits that mindset well. The AP reported El Salvador's partnership with XAI to bring AI tools to public schools. Bitcoin and AI continue to be part of the country's future tech positioning. Now for some debate fuel. MarketWatch ran a piece suggesting Bitcoin's prior crash was manipulated. Yes, markets can be influenced at the margins. No, Bitcoin cannot be centrally controlled. Volatility is not the same as manipulation, although expect to read more about this in the future. In fact, I was just reading an article this morning about Jane Street, which is a big market maker who is regularly crashing the price of IBIT in the morning and then buying more Bitcoin cheap and using options and all that fun stuff. So, of course, the shenanigans with the ETFs are happening. But if you are holding your Bitcoin in cold storage, you can just focus on the big picture and zoom out. Cointelegraph noted extremely low volatility and renewed breakout calls. Bitcoin punishes certainty. Process beats prediction every time. Now let's take a look at the podcast universe for the week. The bull market hasn't started yet. Cycle debate is a theme. Lots of framing battles over whether this is consolidation or cycle failure. Certainly, a lot of people have been wondering: are we still in the bull market and this is just a drawdown, or has the bear market started? Based on the 4-year cycle narrative. And I don't know. And I don't really care. The next theme, Treasury Company reflexivity. Bitcoin treasuries, MNAV, leverage, and whether proxy equities are a systemic risk was another topic in the podcast universe this week. Wallet UX and self-custody quality. Better wallets and the push to make sovereign custody less intimidating, also on the menu. Another theme, macro and the printer narrative. Recurring expectation that policy ultimately bends toward easing and liquidity, although they do fight it tooth and nail because they don't want hyperinflationary collapse. It's a delicate line between stealing a little and stealing a lot from people through inflation. And finally, Bitcoin and payment rails quietly improving, Lightning L2 tooling improving, even when price action is ugly. And of course, as they often say, the bear market is the time for building. All right, so this week's featured post is saving versus investing on Bitcoin Fortress, and I will include a link in the show notes along with links to all of the other news items that we covered this week. Bitcoin has a way of forcing clarity. Are you saving value or chasing yield on a broken fiat treadmill? Again, link in the show notes to that. And if you like it, please subscribe. It don't cost nothing unless you want to be a paid supporter. Then it costs $5 a month. Did want to mention my books. Links, again, included in the show notes. Bitcoin Fortress, a simple guide for beginners. Bitcoin retirement and estate planning. And the Bitcoin lifestyle. Straightforward, practical, Bitcoin only. And again, links below. Check it out. Perfect for the gift list if you're still trying to find that perfect gift for somebody who needs to be orange pilled or learn more about Bitcoin. And with that about wraps up episode 194 of the Bitcoin Fortress podcast. If you found value and enjoyed it, please leave a rating and send it to someone who needs more signal and less noise in their life. Also, did want to mention too, my new YouTube channel. I do include a link to that in the show notes, and I've been posting 1 minute or less short videos on a whole variety of Bitcoin educational topics. That is also free, so check that out. And please like and subscribe so I can grow the channel and grow my educational presence there. With that, I wish you a great week. If you celebrate, happy Hanukkah, and stay humble, stack sats. Bye-bye.